Morning, everybody. Good morning, good morning, good morning, good morning. And I don't care if I'm giving myself a high five. I beat you. That's all that matters, John. That's all that matters. Welcome in, everybody, to Venator Trading Live Stream, Wednesday, January 10th, 7 a.m. New York time. Hope you're having a great day wherever you're at in the world. Hope things are going well. I'm just waking up and I'm trying to clear out all the crud. I don't know if, dude, I was sick in December and then I feel like I'm getting sick again. I don't know. I woke up, my throat's all scratchy, coughing, got a little bit of a headache. But the weather down here has been up and down and up and down. It'll go from 70, and then yesterday the high was like 40. And it's been raining and it's been weird weather patterns here, so I don't know what's going on, but I definitely feel a little congested. But we're gonna trade. Let's see the London scalp, which I don't even know what we've called it yet. We got to come up with a good name for our London scalps. Actually, we're a loss. Cisco, I know it looks like it won, but when you jump in here, you can see on the 5-minute, this is your 5-minute candle right here. You got in at the high, came back down, and my stop, I should have, if I had had my stop right one tick below, then yeah, it would have worked. But I had it at the very bottom of the candle, and it touched, and I got out. It was so I took the loss on this scalp. The interesting thing is on the Forex accounts, it did not. It was fine and it won. So this is the difference between the futures and Forex. You're getting different feeds. You're operating in different broker feeds, and so took the loss on the Think Market feeds is the one that it worked. So it was it's weird how that played out. But anyway, took the loss there. If like I said, one tick was the difference, it would have worked out. Of course, you could have held. We don't do that. I'm just going for the scalp. I don't care what it does after the scalp happens. So it's gone up, and now we're coming back down. Just coming back down, retesting where that broke the Asian highs and the overnight highs there. So now we have our 10-minute London scalp. So we'll wait for this first 10-minute candle to print, and then we'll do and repeat the process and see how it goes today. And then we'll look for any other setups on any other setups that we see on any other pairs that we trade. So this is the Euro futures contract. 6EH 2024 is the futures contract, which I have here because I can trade straight from TradingView. I have my MT5 over there. So some updates on the accounts. Let's see. Because we took that loss, we are at 0.5% on the top step, and we are at just under 2% on the Apex, and just at 1% ish on the Forex. So just moving along slowly but surely. And this is what I've realized back testing these two scalping strats, especially for the future stuff, is you can't this law. It's truly, there was no thought into this other than that was the 5-minute candle. That was where your entry goes. That's where your stop loss goes, and you go back to bed and you wake up to whether you won or lost, and it doesn't matter. But it's just a numbers game, and you just do the same thing and repeat it over and over and over and over and over again on this specific scalp. You can see, just if you're looking at market structure and you're going to do some analysis on the daily time frame here, we're still inside yesterday's. Yesterday took out Monday's low. Took out Monday's low here. We've gapped up a little bit, and we're just trading inside Tuesday's the high of the day and low of the day on Tuesday currently. We're ranging. We're moving sideways. We've got news that comes out. We've got some inflation news that comes out for the dollar tomorrow and on Friday. Again, some more news. So we're just really consolidating. We're still kind of in that holiday hangover. The first week of January, there wasn't much trading action or volume while the market was moving. It's just now most of your money managing type traders are coming back in around the second week of January. Some don't even come in until February. So this sideways action, not uncommon here on the 4-hour chart. So we're just kind of in the middle of all that mess. In the middle of all that range. On the lower time frames, you've grabbed some liquidity, you've broken above, you felt right here, you've put in a new high. So you ran this, you couldn't break through and come back lower here, and you put in a new high. Currently, we're inside this fair value gap right here. So we'll see how this 10-minute candle plays out, and then we'll go from there. Gold, the Gilded Gal. We didn't even look at gold yesterday, I don't think. Shockingly, here on the Venator stream, did not look at it. This is futures contract. GCG is the month that we're in, the contract that we're trading. It would be, of course, XAUUSD if you were trading on your Forex broker. But so the prices they're not going to line up exactly with whatever you've got on your Forex stuff. What am I looking at daily? Yesterday was an inside day. We've taken out Tuesday's low. We're still inside of Monday's price action. So what's that mean? That means we're ranging. It means we're just kind of moving sideways here. 4-hour time frame. We've taken out sell side liquidity. We have not displaced below this old low right here. We tapped into it. That was Monday, or that's Friday. The Monday low, and I guess this right here, Monday high, Monday low. And this is all of yesterday's price action, and then currently. So just moving sideways. Nothing spectacularly interesting there to me. Even when you see it take out stuff like this and you see displacement up, you haven't taken out the previous day's highs or lows. Some people get in here and start buying and expecting it to just start running higher. Not to say that it can't, but we're just chopping. We're just chopping. We've taken out some short-term buy side. We've taken out some short-term sell side. And now we're just stuck in the middle. We couldn't get back to the buy side, and we haven't gotten back down to the sell side either. So nothing spectacularly interesting. ES, this was the Monday move up that I was telling you about, that 1 to 3 off the 5-minute 7 a.m. candle. Oh, I did scalp this last night too. I forgot about this. This was the London scalp. This was the sweep of the Asian lows right here. You sweep the Asian lows, you come up, you invert this fair value gap right here. You leave behind this small bullish fair value gap. I got in here and I was just targeting the Asian highs. So while I took the loss, that's why my account isn't down further than it was on the top step or the apex, as I took the loss on the scalp on the euro contract, but then I scalped on both the top step and the apex account. I scalped this little Asian move, or it was the opening of the London. So when I was up placing that scalp, I was watching it and I was seeing that had run sell side liquidity and it had displaced back up. It inverted this first fair value gap, left behind one right here, got it in. Stop was down here at the low, and we just targeted the Asian session highs there. Pretty simple little thought process there. Played out very nicely. If I had held it all night, man, I would have run. But again, this is when the if I's, you hear traders talk about if I's, right? You can't play the if I game. You just have to trade your risk reward ratios. You have to trade your strategy. You have to take profit at the right levels. You have no freaking clue that it's going to go that high. So you just target your Asian highs. It made the most sense to take my profits there. It was just like a 1.15 risk reward ratio. I wasn't even risking a full percent. It was like 1/4%. So it didn't completely erase the loss from the scalp, but it was helpful. All right, first 10-minute candle is done. We can go to the ES. We can go to our 10-minute candle. We have it was bullish, so we will put our right there, and we will target 1 to 1, and we will go create a limit order. Stop. I'm going to risk 0.5% on these, and we'll put our buy stop in, and then I'm going to set it up on my other 2 accounts as well. So get this set up on Apex as well. Give me 1 second. And again, we will risk our $500, 0.5% on this. Would do 1% if we were locked in on a higher profit, but going 0.5%. On the Forex markets, I'll do a full 1% risk there. But we have tighter drawdown limits here on Top Step and Apex. So we got the... Ah, shit. That's not what I wanted to do. Damn it. I hate it when I forget to do the... That sucks. I hit market instead of stop. Stupid. There we go. Now we have a stop order on Apex. We have a stop order on Top Step. And now I will set this up on my... Give me 1 second over here. I may move my mic. And we're going to go with lines. I'll go lines. Buy stop. And we'll do the same thing over here. I'll go. All right, buy stops are set on all of the accounts there. So we'll see how the New York scalp plays out here today. So far, everything has gone fairly well at the beginning of January. Everything has gone fairly well. So we're just going to let the statistics play out here. And again, no random thought process to other than it works. And I don't know why it works, but over hundreds of amounts of trades, I know statistically where this goes and how this plays out. And we'll just let it run. If I'm looking at NQ, we've taken out buy side liquidity. We have displaced back through on the 15-minute time frame this fair value gap. We violated this fair value gap here, created a lower high, drop back down. We've tapped into this fair value gap here. We'll see if it wants to respect this bearish price action now and come back down in and clean up some of the fair value gaps from the London move up. On the higher time frames, all we've done is pull back, right? This is just a pullback. London swept the Asian lows, displaced higher. And now we've spent the last 3 hours coming back down. Well, two hours. Now we're into our third hour here, coming back down and just kind of backfilling in some of this move up. So just a retrace here from the London move. Lower time frames are going to show up as market structure, putting in lower highs, lower lows. So where does the higher time frame pause right here now? We've retested that break. Is it going to run up for the rest of the day? We're going to consolidate. We're going to chop around. We're just going to hit some here and chop around. I don't know. But currently, these are the structures that I would be looking at to see where does the higher time frame want to go. Does it respect these down here on the lower time frames to send price lower back into this area? ES, same thought. You can see on ES, we did not take out those highs. We've left relative equal highs up here. NQ has taken out those highs. The NAS has taken out those highs right here and pulled back in. And again, ES has not taken out those highs. Oh, that's Euro. Here we go. ES not taking out the highs. NQ taking out the highs. So a little bit of SMT there. Really just basically straight. Where was this high? This high was 48.04, 48.04 to the tick. To the absolute tick. It's nuts. All right. We didn't get triggered in on any of these Euro trades yet. Do have our buy stop set. We did close above this fair value gap here. We did get a body candle close above this fair value gap. That's not to say I'm anything other than a bearish price action was violated. We'll see how it wants to react down here. If it pushes back down into this low, if it wants to then find some new strength to push up higher. If you look left, this 30-minute fair value gap right here is where we stalled out. Which is a 1 hour order block right here. Failing to displace above these old highs. Seems like it may want to push down and just continue the choppy range. But we'll watch and wait. Nothing else really to do right now. I'm not really seeing anything else. You could say on the 10-minute time frame that you have a little breaker set up here. Down close candle, we do run some highs. And we've had our break of structure here, fair value gap. So this fits in with the ICT 2022 mentorship, where you run a high or reach into a this is the 30-minute fair value gap. but you've taken out sell side or buy side liquidity, you've displaced lower, you've had a change of structure, there's a fair value gap, you enter in, and you would target potentially like at least 50% of the overall move, which would be down here in this fair value gap, which would line up with an OTE entry. But again, on the way I view, again, the rules for this particular scalps that I'm using here is once the orders are set, they stay in all day. You don't close them. Everything stays where it is. So even if it comes down and trades through where the current stop loss is placed, if I were in this trade, obviously it would have tapped me out, but we're not even in the trade. Trade has never been triggered. The orders stay set all day long. You close them at the end of the day. Now, if it's like, if it's 3 o'clock, whatever, yeah, don't wait for an entry. You're not going to get, it doesn't make a lot of sense. So I would probably close this if it didn't get triggered in. Probably we're at somewhere like around 1340 or 1400. If it didn't get triggered in by then, I'd probably just cancel it. But otherwise, this is just going to stay open and run, and it'll do whatever it does. Did anybody take the London scalp last night? John says, so I had the best day I ever had 2 days ago. I remember that you talking about that. You made like a $700 day. Yesterday I had the worst day. Broke so many of my rules. Pretty sick of myself. Dude, I know that feeling so well, John. Man, I have done that so many times. I've done that so many times where you know exactly what your rules are. You know exactly what you can and can't be doing. And you just do it. And I know that feeling, that feeling of letting yourself down, the self failure that you feel. Ugh, that's brutal. I understand. Major Pip says, we used to see how much funding challenges you had. What happened to that? Just cleaning up the screen. And because we have 3, I just didn't want to have all of the different numbers and stuff up here anywhere. Just keeping it clean. Keeping the BFP sponsorship banners up because we love BFP, and they're awesome, and they help us out, and they let us give away all the 10K accounts every week. But other than that, I'll just update you. I'll just show you what the accounts are as we go. Why? Is that why you didn't get your first like today? John was feeling bad. Why 6 a.m.? I don't know. I don't know why the 7 a.m. New York. It's a 7 a.m. New York candle, but I don't know why the 7 a.m. New York candle does this, and I don't know why the 7 a.m. or the 7 a.m. London. So London, it's 2 a.m. New York, but it's 7 a.m. in London. It's the same on that 5-minute candle. I don't know why. It's just those. That's when the market opens. That's for whatever reason. The 10-minute candle will go 1-to-1 in the whatever direction it closed in. Almost 60% of the time. At least it did last year. In 2023, every single trading day, over 250 different trades. For almost 60% of the time, the 10-minute candle, however it closes, would move another equal amount of that candle's direction 60% of the time. And on the London, it's the 5-minute. So this 5-minute candle here, this 5-minute candle on London, almost 80% of the time will give you another at least 0.5% move, or at least half of its candle body. It will move in the same direction again, almost 80% of the time. And all that means is with that information, I don't know why it does that. It's where the London session opens. So wherever that first 5 minute candle prints, it's like immediate volatility, immediate volume from the London session coming in, and it just wants to continue up or down depending on how those first 5 minutes go. That's the only thing I can figure. It literally has nothing else to do other than with that specific time of the session start or the kill zone start. I don't know why. It doesn't make any sense to me. As far as from a technical analysis standpoint, it's more of a fundamental standpoint of, oh, we're creating the volume there, and we're creating the initial direction of the day, or at least the first couple hours for whatever reason. So I don't know. And the 8 a.m. candle is not as accurate. And I think some of that has to do with the fact that news comes out so often at 8:30 that the 8 a.m. candle is not as reliable because you have so much, you can get a lot of crazy reaction. You can get a lot of very just consolidated or really tiny candles, and then news hits and it'll take out both sides rapidly. The 9 a.m. candle, not as accurate. 10 a.m. candle, not as accurate. I don't know why it's the 7 a.m., but the 7 a.m. candle, the 10 minute. And I tried this on the 5. I tried it on the 15. I don't know that I tried it on the 30 minute or the 1 hour yet. I'll have to wait and see about that. I need to go back and, like I said, I didn't have time to just do every pair and every time frame on each of those pairs and each of the risk reward ratios to see which ones were the best. I did enough to tell you that these are the most profitable at this time right now. And I don't know why. I still sit here and for the 3 weeks that I've been working on this, it's like, I don't know why there's absolutely no reason for any of those things to make sense, but they do. They work. The rules for the New York session is euro dollar, 10 minute, the first 10 minute candle, the prints. So right here, this candle right here is the first 10 minute candle that prints. You're going to just, however it closes bullish, you're going to set a buy stop above the top of that candle. Your stop loss would be at the lower end of that candle. You could move it a tick down if you wanted a full break. I leave it at the end. And you just target a 1-to-1. It is a strict 1-to-1. And it's accurate to, I think it was like 58% of the time in 2023. Some months were extremely more accurate. Like in January, I think it was like it was over 70% accurate in January, February, March. It was the same thing with the 5-minute scalp. The summer months got pretty brutal and choppy. Let me go look and see what I think there was only 1 month, maybe 2 months where it was either negative or basically break even on the 10 minute. I can pull up the analytics here real quick and show you. So here's the analytics for, you can see basically July, not great. August, super choppy. So you had your high here put in at the beginning of July. The account high was right here. And then for July, August, and September, and most of October, it was just very basically break-even-ish, slightly loss, right? So you put in a high here. Your high was 28. You were at 28% by July. So the first 6 months, basically, you made 28%. And then from July to December, you only made an additional 4%. So for whatever reason, the first part of the year, this worked great. And then summer sucked. And then you started making profits again about the middle of October, all the way to the end of December. And your max winning streak was 6 in a row. Max loss streak was 5 in a row. Here you can see Wednesdays were the days that it worked the least amount of times was on Wednesdays. Your best days were Mondays and Thursdays. So you can see in January, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 winning days and 1, 2, 3, 4, 5, 6 losing days. So that was a 4% gain in January. It's just over 4%. February was your best month, I believe, for the New York. March. So this is just every single day. Had you done that, this is where you would be. July, here's July. August is basically break even. September, slightly down. October picks back up. November, it's okay. I mean, you were profitable. On a 100K account, that's almost $1,700, right? So, I mean, that's not bad. And then December, profitable, but basically break even. So this performed really well all the way to June. And I say really well, meaning that you ended the month in positive territory. And when you look at these numbers, this number right here, this 5% number is based off of the new account gain, right? So when you see 5%, you actually made more than 5% off of the original balance. So assuming February, so look at February right here. So you started with a loss, so that's a minus 1,000, right? So you're at break even, you're plus 1,000, plus 2,000, back to 1,000, back to break even, right? And now you're at 1,000, 2,000, you're back down to 1,000, plus 2,000, plus 3,000, plus 4,000, plus 5,000, right? Down to 4, 5, 6, 7, 6, 5, 5% gain. I guess it was $5,000. But what I was realizing is as your account grows, the percentages that you see in profit here are based off of the now larger account size. So this account at January ended at 104,026, and then it ended at 109,000. So this 3.8% is based off 109, not the original 100K. So you actually made a little bit more than $3,800. You made a little bit more than 2 in April because these percentage gains are based off as the account grows. The percentage gain is off of the new amount, if that makes sense. But yeah, there's the analysis on that, the analytics, the data. Data. For ESY 7 a.m. That's when the okay, again, I start at 7 a.m. as the time in which you're looking for trades, you're looking for the New York session to start being active is from 7 to 10. That's when you're looking for the major moves to start is going to be somewhere between 7 and 10. And so I started at 7, 8, 9, 10. I tested 7, 8, 9, and 10. I tested the 5-minute, the 10-minute, and the 15-minute time frame all year long for euro dollar. Same with, I did 1 a.m., 2 a.m., 3 a.m., and 4 a.m., and all of the time frames in there, 5, 10, and 15. And the 7 a.m. London and the 7 a.m. New York, I don't know why they work, but that was the data. That's the way it turned out. Let's see. NAS was so strong yesterday. Well, it screwed me a bit on competition again. Oh man, I'm sorry. Prop firms. Oh yeah, the prop firms all run free competition accounts. Those are the ones that I was saying, John, that if you just have that itch to break a rule, you wanna just gamble, you want to put in your max lot size and over leverage, do it on your competition accounts. So at the end of the month, they start at the beginning of every month, and at the end of the month, Some of them, like the funded trader, I think their competition account, it's not, you don't like have to win. You just, if even if you just make like, let's say 20%, I think what it is. It's either 20 or 25%. You'll get a free challenge of some value, of some size. I can't remember what it is. Is it 50K or a 10K or something? I can't remember. But other firms just are like, hey, the winner gets their max size challenge plus some cash, and then it goes down to like the first 50 spots, and the prizes get less and less valuable depending on how you do. And Cisco's right; they are complete gambles. You have to get extremely lucky, and you have to be just right time, right place, get the right trade, and max leverage, hold a swing at the beginning of the month, hold it for a week or two, and make 50, 60, 80, 100%. There's most of the people in there that win have made like 100, 110% or something like that. It's stupid. It's stuff that would never be replicated on a truly live account. Mr. Alfie, I got the London scalp this morning. Way to go, Mr. Alfie. Good job. BFP just said they are now caught up with the payments backlog issues they had. Yeah, so I had Max and I, Max is the CFO. We had several conversations over the holidays just about Bespoke and how they're set up for 2024. And I know they've been frustrated with a lot of the public outcry over why stuff has been taking so long. And it truly is a kind of a, I don't want to say it's a comedy of errors, because it really wasn't an error. It was a comedy of circumstances that led to some of the backlog there. A lot of it was some of the issue with deal that came out when my Forex funds got slapped with their lawsuits from the Canadian and the U.S. regulations. Deal stepped out of the payment transaction processing for prop firms. And some banks actually stopped working, and that was what happened with Bespoke. They had to change banking structure. They had to change payout structure. It was never a liquidity issue. Then on top of that, they were dealing with a lot of scammers and trying to manage their risk as well as they possibly can. And so it was all of that. It was a big learning process. There was it was never, and there has never been liquidity issues with Bespoke. They are set up perfectly fine. And it was they're a year old. So it's still a baby company. And with that comes some growing pains internally on the administrative side, which they've now gotten figured out and ironed out, and everything should be great. You should see Bespoke back in the top of the recommended firms among traders. They just have so much more to offer. From max account sizes to just the features that they have as well. So yeah, they've gotten all caught back up, and everyone should be back now in their normal payout schedule, which I think is like, what is it on their website? I can't remember what it is. A 48-hour guarantee payout. It could be sooner than that, but it will. I can't remember what it is. Don't quote me on that. I haven't looked at it recently, but yeah. Mr. Alfie says, has been looking at similar strategy and found the 7:35 candle on GMT time on the 1 minute pretty reliable, and the 12:35. See, when you realize that you can scalp and make money with a negative risk reward ratio, if you can find, it all comes down to just data. If you can find a specific time in which the market is active and the volume is there, and there is a certain amount of time typically when most people are trying to get in and out of positions. And when they're doing that, very often it keys in. I don't want to call it an algorithm. I don't want to call it that. Maybe I don't know what it is. Maybe it is an algorithm. Maybe it's just a mass consciousness of traders that see volume come in and they don't want to miss, and so they continue more volume a certain amount of time. It doesn't mean it's going to run that direction all day. It just means that for the next little bit, because this happened at this time, the volume is going to continue in one direction. Price is going to continue on in that direction for X amount. And it's up to you to decide and figure out through data and backtesting, how far is that going to be? Is that going to be based on that 1 minute candle, like Mr. Alfie's saying? He's seeing it at specific times on his models that he's testing the 1 minute 7:35 GMT candle. I don't know what he's talking about, how reliable it is, or the similar strategy. I don't know if he's saying it goes, you can scalp another minute after that or 5 minutes after that. I'm not sure, but he can share if he wants to. But you just do your own data. Like, you can go in and start back testing. You can just go to that session on FX Replay so quick, and you can knock out a month of 20 trades, at least 20 trades. You can knock out a month of that for in 15 minutes or less. It doesn't take long. And then you've got this data, and you can knock out a year probably in, a few hours, because you're talking 250 trades going in, and you have to set it up every single time, make sure that it's exactly the way you want it to be. Otherwise your data's going to get all screwed up if you do it, if you're not paying attention and you don't do it right. So, it sends you down this rabbit hole of, okay, well, where else? What other time frames? What other pairs does scalping opportunities present themselves for me to take advantage of and profit from? And like I said yesterday, if you find a strategy that is consistently wrong, and it's consistently wrong, you start noticing patterns that, okay, let's say you took and you started with a 5 minute candle, and instead of setting a buy stop, you started testing that, hey, I want to take a break of that candle, and I want to start with bare minimum 0.5 R, right? Or 1-1, whatever it is you want to do. And you notice that the pattern is more often that if it breaks the high, let's say it was bullish, once it breaks the high, it more often immediately reverses, and it's going to take out at least the low of that candle, right? Not even targeting below that candle. You're just saying that if it breaks the high of this candle, X percentage of time, it reverses and takes out the low of that candle. That's a trading strategy. It's as simple as that. And you start noticing that. So now that's a strategy that you can backtest. That the 10-minute candle at 7 a.m., if it trades in the same direction of that 10-minute candle, you can set a reverse order. Basically, you're going to sell the break of that candle because you've seen on your data that it often reverses 70% of the time to take out the bottom end of that candle. Not even that it goes another 1 R or 0.5 R below it, just that it breaks that candle, right? So all of that is opportunities just to test data, purely mechanical strategies that have absolutely nothing to do other than just specific time of day. And the specific time of day is built into the way traders in mass operate. Call it an algorithm, call it market psychology, call it groupthink, whatever you want to call it, herd mentality. For whatever reason, these things happen in enough times that you can profit from them and have a profitable strategy. Water feels wet. Oh gosh, here we are back on the sky is blue and the water is wet. What was the max drawdown? That's a good question. So it doesn't give you that. You have to, I think you have to just calculate that on your own. That's some statistics that I don't think it gave you on that. Let me pull it back up here. See if it sees this. Does it give you max drawdown? No, just max losing streak. No, it does not give me the max drawdown limit. I would have to go back in and see. Let's see, the high here was 7 and then it went down to that's a 3% drawdown there. A 4% drawdown. I'm just looking from the highs. Let's see, 15. That's a 3.5% drawdown. This high, 23, that's a 3% drawdown. I think the biggest one would be from 28. That's 4. So it looks like the max drawdown would have been in July. Your worst month would have been July. You would have gone down, even though you ended the month only 2% down. You would have gone down, I think, 7% in July. That's a 1% risk. From the high, you would have gone down 7%, and you would have ended only down 2%, if that makes sense. Like you would have pulled that back up from 7 all the way back just to a 2% drawdown for the whole month. But in the month itself, you would have been 7% down. And I think it looks like most of them up to July, looks like 3% was 3.5% was the max drawdown limit on that at 1% risk. That's just me eyeballing the equity curve, and you can see when you hover over, you can see the numbers. So that's not scientific data. That's just eyeballs. What's up, Reggie? Welcome in. Sorry, I'm catching up on the chat, guys. So based on the cumulative profits, would it be fair to say it wouldn't have grown 32% if you were taking payouts every 2 weeks and going back to zero? Yeah, if you take your payouts every 2 weeks, you definitely wouldn't have made the full 32% because some months, well, I don't know how that would have worked. You would have to do your sessions monthly at a time and start over at zero every time. Hold on a second. Which wouldn't be too difficult to do. Heard FTMO is no longer taking U.S. clients. Yeah, that came out yesterday. FTMO has decided to stop. Now, if you already have FTMO, if you're already a U.S. client and you work with FTMO and you have challenges with them or funded accounts with them, you're still fine. They're just not taking on any more new U.S. clients. And I think some of that is because they're their own liquidity provider. And that was the same thing that my Forex funds was getting in trouble with. They were not using a third-party broker. And that's why they got in trouble. Basically, that's why they were targeted by the CFC and the regulators, is because they were providing their own internal liquidity, which means it was not a fair market because they had control of the price, the market, they were not a neutral party, basically, is what that comes down to. And so same thing with FTMO. They do not use a third-party broker. They use their own internal liquidity to provide all of the pricing and order execution. So they probably realized, oh, well, we're going to get tagged just like even though they don't operate inside the U.S., they can still get sued by the U.S. if they'll figure out a way. And so I think they're just trying to avoid a lot of the headache that's coming for any firms that are using their own internal liquidity. Same thing. So it seems to be firms that are operating where they're using external brokers like Think Markets, like Bespoke uses Think Markets or Purple Markets or 8cap or whatever it is, right? If you're using a third-party broker, you're not providing your clients the actual market conditions in which trading should be taking place. Those firms are probably okay. But FTMO, they don't do that. And so they've gone ahead and pulled the plug on the U.S. clients. Jogging. I don't know. Jogging's kind of a cool name. Reliable in that it won most of the time I looked, but not tested enough to say it was worthy of calling it a strategy. TP was half hour. Yeah, so for me, you're going to have to test. You're going to have to see it play out over a year with that scalping strategy, because what I realized is I was super pumped about it. And every single time I would get like January and February, I was like, oh my God, this is the holy grail. It's like making 4.5%, 5% every month, right? And then you're going to get a month where it makes like 1% or 2%. And then you're going to get and then you get into the summer months. And as I got into it, I was like, how is this strat going to perform in July, August, and September? And every single time, every single one of these scalping strats, when it got into the summer months, was pretty trashy. It was break even or just slightly above break even, but it was just trashy to trade. It was just, they were just not. It would just be win a day, lose a day, win a day, lose a day, win a day, lose a day, lose a day, lose a day, lose a day, win one or two, right? Like they were just not very good. So you got to get a couple hundred trades on that system to really know how it's going to perform across the entire year. Cisco 7% is not much really. Oh no, it's not. 7% drawdown at any one point in the year is not, over the course of a year, to only go into drawdown by 7% and ultimately to pull that back up to nearly break even, and then as the other months pull that completely back out. Not bad at all. So if you think of trading in the scope of a year instead of a day or a week or a month, just knowing that every day you're taking one small step, one small step, one small step, at the end of the year, knowing you're going to get where you want to be, that's really the only way you can operate, I think. Just chopping here. This fair value gap has been respected on the 10-minute time frame. We had a change of structure here, made a new low, came back up. We have failed to displace and go higher. Fair value gap holding it down. If where might it want to reach into? Perhaps down into it's this order block right here is holding price up. So if you look on this 30-minute time frame, bearish candle, bullish candle breaks. So this is what's holding price up currently. But we're chopping. We know in the higher time frames we're just in the middle of chop. That's all we are. It's just in the middle of chop. And probably it wouldn't surprise me if the rest of the day is very similar to this, only because we have the inflation news that comes out tomorrow. So it wouldn't surprise me if this comes back down into here, maybe rebalances some of this and chops around here today. This may never get filled. ES had a closure above, came back down, inverted fair value gap. Not sure what it wants to do there. NQ being respected here now on this change of structure here on the lower time frames. No real breaker setups here anywhere for me. If anything, you would be wanting to get long off of the London extension here, and this, looking for a pullback from London. I didn't put that in the right spot. It's pulled back down into the OTE. It's rebalanced on NQ, at least rebalanced some of this, coming back down to retest those Asian highs here. So we took out the Asian lows, ripped above the overnight high. We're coming back down now and retesting some of the Asian range. Will it want to hold up? Don't know, but this is the OTE area. This is the deep retrace pullbacks you're looking for to continue another leg up, to get to in one of these extensions, 0.27, 0.5, or 1, a full one extension there. Oh, I want to go back and test pound, and I'm still looking for a scalping strategy that is consistently profitable for both NQ and ES as well, for NAS and S&P. And I've not been able to find a purely mechanical, time-based, candle-based, momentum-based, reversal-based strategy just yet. But that's my goal, is to find one that I can use. What's up, Ben? Has the breaker block strat been thrown in the bin? Now, no, I'm still looking for the breaker block. I'm still looking for the breaker block, and I'm still going to be trading. I will be looking at NQ and ES after 8:30 a.m. I'll be looking for my typical kind of trade setup. So fair value gaps, order blocks, inverted fair value gaps, breaker blocks. I'll be looking to trade ES and NQ off of those this year. Maybe some on Euro as well. We'll see. I'd like to find something for gold too. I mean, who doesn't want to master the gilded gals? To be able to find a consistently profitable strat I can use on gold would be nice. A little scalp strategy. But no, I'm not throwing anything in the bin. I'm just trying to add more tools into the tool bag, I guess basically is what I'm saying. And really the scalping strat, one of the main reasons I really wanted to find a good scalping strat that worked for me was the futures challenges. With the trailing drawdown, and especially with Apex. With Apex, it's so cheap to get into the challenges, but the trailing drawdown is such a killer that if you don't have a scalping strat, it's so difficult to pass. But if you can pass it, let's say you get funded on Apex, right? You get a 100K account. Once that trailing drawdown hits your original account balance of $100,000 or whatever size account you have, 50, 100K, 150K, I think those are the three they have. But once your trailing drawdown comes up to your original account balance on a funded account, it stops there and it no longer trails. So you can build that profit up and you don't have to scalp anymore. Not that you can't keep scalping, right? I mean, if it's working and it got you a 6% gain, hell, why not keep using that for sure? But you can now incorporate your other strategies and hold for longer. You don't have to just hit those quick hitters and slowly just put a brick at a time up on the scalp. You can really you can open your entire tool bag once you're funded. But to get funded on the futures, I think scalping makes the most sense, at least with Apex. Top Step, because they do end of the day drawdown, it's not as important to scalp. But Apex, you're going to have to scalp your way to winning your challenges. 100%. You're just so much in danger. You're in a lot of danger of never losing a trade and still losing the account if you're not scalping and taking your profits along the way. I got tagged in the New York scalp, so took a loss. Really, you got tagged in on that? Man, that's the thing. If you're a broker, because on Forex, if you're not every broker is going to have a different data feed. And I am not tagged in Did I get tagged in? Oh, dude, I got tagged in on that too on the Think Markets. But let me check the other one. Hold on. I guess it did get tagged in. Did it get tagged in there too? Yep. That's crazy. So didn't get tagged in on the futures. Did get tagged in on the bespoke account and took the loss. See, this is the beauty of the futures versus Forex challenge here. Same trade, same entries as far as where the limit orders were placed and the stop orders are placed. And Forex took the loss and futures never got entered. Futures does have a spread. You can see right up here. It's not much. It's like half a pip spread on futures. But the thing with the futures contract is that the price that you're looking at right here, no matter what broker you're on, it's the exact same because you're getting the live data from the actual Chicago Mercantile Exchange or wherever it is that's providing this live futures data, the regulated data for the futures contracts. There is no funny games. There's no way that one broker is going to it doesn't matter if you're trading futures right now and you had this same stop, but you were using AMP or you're using Thinkorswim or you were using Trade Evade or you were using whatever your broker was, right? No one got filled on that if your stop was right there. If your stop entry was right there, it does not matter on futures what broker you're using. No one is getting filled. But on Forex, it actually did get triggered in. This candle right here, this down close candle was at the 730 candle. The high of that candle on Forex actually wicked above. And on futures, it didn't. So there you go. There you go. I did go through and look at the correlation. If the London loses, how often does the New York also not work as well? And so like, let's say every day you took the London scalp and the New York scalp, right? It was very profitable. There are multiple days where you're winning both. And then there are days where you will win the London, lose the New York. And then there's days where you'll lose London, win New York, win London. You just have to kind of look. But it was very profitable. More profitable than just doing London by itself or just doing New York by itself. It was very profitable. And basically what I did, let me see if I can pull this up. I can show you what I mean by that. Let me minimize this. Let me see if I can find that on here. Which one is this? Nope, not that one. Okay, this looks like the London. So here's a screenshot of the London stuff. Let me just pull this up here. So you have that. That's because you're winning half when you win, right? So here's 2023, right? And I believe this is, oh, dang it. Yeah, okay, so here is the New York, and let me pull this one up, and this is the London, right? So if you line these up perfectly with each other, you can see, right? Win, no entry on that one. It never got triggered in. Win, loss, win. you can, this is 2023, January 2023, right? So you can then correlate how often January you would have freaking killed it. I think it was like a 14% gain or something like that in January. It was a huge gain. London by itself was like 5%. New York added into that was really good, combined together. So you can go through and see the correlation. February, you won, you lost, so on and so forth. It's interesting data to have and to use. Pull my stuff back up. Here we go. You do have to account for the spread in the Forex brokers. That is true, Cisco. So if that means you have to go to, instead of 0.5R, maybe you have to go to 0.6R to get a true 0.5 total net. As you built a strategy looking at buying when the bid price is breaking the candle, not the ask price. Oh, yeah. As you build a strategy, yeah, you should be looking at the bid, not the ask. Yes. So when you're building it, you put your entry at where, based on the spread. That's correct. And I didn't do that when I was building this out. It was strictly just a break of the candle or a touch of the candle. Do you still pay spreads on futures with limit orders? It depends. So, for instance, you can see the spread right here on euro. But on ES, tiny little spread as well, but not much. And NQ, tiny little spread as well, but not much. A couple little ticks. That may not be accurate. What you're seeing here may not be exactly what it is on the price. Like when I look at Tradeovate, so Tradeovate is the platform that I execute the trades on, and I can link Tradeovate to TradingView. So on TradingView, there's a spread that shows up, but if I look at Tradeovate, there is no spread. It's just exactly where the price is. That's where price is. There's no, if it touches it, you're in, you're out. There is no spread on the Tradeovate platform itself. But on TradingView, for whatever reason, it does show up as having a small little spread on all these. But on the actual futures platform, there isn't one. All right, here we are into the first 10-minute candle, the 8 o'clock hour. And yeah, we're just chilling. Not much going on. Probably not going to stay on too much longer today. I got some things I got to go take care of in real life this morning. I'll give it another maybe like 10 minutes here or so. Actually, no. Let's just go ahead and call it now. No reason to stay on for 10 more minutes. If I'm gonna be on for 10 more minutes, what good does that do? I got nothing else to do anyway. I do need to go take care of some stuff. So, all right, we'll be back tomorrow, same time, same place, and doing the same thing. And we'll see how it all goes. Bye, John. John's like, great. I can get Top Step TV warmed up, ready to go. No, I don't gotta poop. All right, guys. Have a great day. Stay safe out there. Do some back testing. See how this plays out. Pick out a time frame. Pick out a pair, and go after it and see what you can find. And maybe we can find something new together to test and work out. So, all right, y'all. Have a good one. Be safe. We'll catch you tomorrow. Adios.